So we also have like Manjula Ramakrishnan and Ritu and Ravi from Arya CFO Services. We directly start with addressing some FAQs that we have collected through our participants, and we'll first go through some frequently asked questions, and slowly then we'll at the end open the floor for people to ask us questions directly.
Thank you, Yash. Good afternoon, everyone. I think as Yash has already mentioned, we'll get into, first of all, addressing some of the questions that have been received by us. So we break this up into sort of some of the financial and regulatory related questions to the team at Arya and Manjula, and questions on impact which have been asked, which I will address. So Yash, in no particular order, maybe you can just roll out the questions.
Yes. So the first question that we've received is, an organization which is 4 years old and has received funding of rupees 7 lakh in the previous year, but has received a funding of 30 lakhs in the year before the previous year. So would it still be eligible to register on the social stock exchange? Would request Arya to take this question.
Okay, thank you. So the question that we have right now is that someone with a funding of 7 lakhs in the present financial year, right? Irrespective of what the funding has been in the previous years, based on the framework that's been provided right now currently, it does come across there are 2 conditions when it comes to what kind of funding and spending that an organization should have to be eligible to register for SSE. The very first being the receipts, the payments from your audited accounts of the past financial year. It's just one past financial year. That needs to be at least 50 lakhs. So that's very clear in from the framework. And they are very precise to say it's only from the past financial year. And the second bit is that the receipts should be at least to an amount of 10 lakhs. So at least for us to understand for this question, yes, if you do have just 7 lakhs in the last financial statements, at this point, it looks very tricky for them to be eligible for a social stock exchange. But we're hoping that, if there are some other updates on this as and when we progress, things might change.
Thank you. The second question that we've got is an organization's 12 AB certificate is up for renewal in the next 9 months. So can such an organization still go ahead and seek registration with the social stock exchange?
So I think over here, again, the guidelines or the framework rather, which were notified in September, are very clear that any organization that is applying should have a 12 AB that is valid for at least 12 years when they are applying. So this means that, this organization, which has only 9 months left, will not be able to apply. They have to have at least 12 years. That means you have to go in for the renewal process, get it extended, and only then you can sort of approach to be listed.
Or I think just to add to it, I think it's a good way to know that if they're saying that only 12 months, at least 12 months should be there, start the registration process a little earlier.
Yeah.
Okay. Thank you. Then we also have the next question is, can zero coupon, zero principal bonds be traded on the social stock exchange by the initial investor? So I would request Manjula ma'am to take this question.
Thank you, Yash. Hello, everyone. So before I actually answer the question as to regards to the tradability, just take a step back and just explain a briefly about what the instrument is, and also a brief on what a bond is and how it becomes tradable. So actually, a bond is something that it's a financial instrument that is where a company actually issues these bonds and invites investors to invest in the bonds, and in return they give you interest, and at the end of the maturity period it can be redeemed. So there is a profit element or a financial return element in a bond. So when we compare it to a zero coupon, zero principal bond that is being proposed by the social stock exchange for the non-profit organizations as a security to be raised on the exchange. So this again sort of compares with a bond in the sense that there is an issue size that is they have stipulated. There is a application size, and there is also a pricing of the bond that needs to be done, and this has to be issued where funders and investors will actually invest in the bonds. The only difference being that there is no financial return. There is no interest that will be given. There will be no principal that can be redeemed. So what happens is it will actually take the nature of a grant or a donation. So the initial investor when you actually look at it, the initial investor is actually giving the NPO a grant. Where if you actually look at a financial bond, after this initial issue, what happens is it goes to the financial market and it gets traded there. Traded in the sense that what happens is people may buy this in the secondary market at a price which is higher than the original price or which is lower than the original price. So this cannot happen in the case of a zero coupon, zero principal bond, and hence I think there would not be a tradability issue that would come that would arise out of this bond. Having said that, we don't have a notification or a notification given by SEBI with regard to this matter. We are also expecting some notification because there is an amendment that is happening with the SEBI regulations, and they're introducing a whole new chapter on the ZC-ZP bonds. So let's wait for it. Thank you.
Thank you, Mandra. The next question also is actually around the ZC-ZPs. And an NGO asks that they conduct 3 different projects in the same state. So can they raise funds for the 3 different projects simultaneously by issuing 3 different ZC-ZP bonds on the exchange? Or since the target location is the same, does the organization have to raise money through only one ZC-ZP bond?
So as of now, there has been no notification by SEBI stipulating the number of issues that an NPO can float on the SSE. And also when you're talking about ZC-ZP bonds, it's been very clearly mentioned that it is for a specific project or an activity, and which has a specific tenure. So there is a size, there is a tenure, and there is a which has been stipulated as of now, and there has been no notification saying that a NPO can issue only one ZC-ZP bond. So I think it may be possible. So for example, if an NPO has 3 different interventions either under the same program, maybe they can because it says it is for a specific activity, maybe it can raise a ZC-ZP bond for each of these activities. Or if an organization has, say, 3 interventions, say under health, education, and women's empowerment, so it can raise 3 different issues under each of these.
Thank you. So the next question that has been asked is there any deadline to register on the social stock exchange? I would request Vijaya to take this question.
So I think as of now, there's still the social stock exchange sort of, it hasn't even been sort of formalized and sort of set up just yet. We'll have to wait and see. We don't know further details at this point in terms of what are the further sort of listing requirements. We do know that, currently the primer series that we're running is really to kind of understand what are the sort of pre-listing requirements, right? Once they talk about the listing process, there will also need to be a sort of a verification and a certification process by sort of certified agencies also. So we still need to wait out for that. I think the whole efforts right now for us are to to have some level of readiness for organizations. I think that's what sort of my submission to any nonprofit would be, who is looking, is one to understand that yes, there are possibly new sort of instruments that will come. There is a new place where you can actually look to raise money. 3, you can only raise money if you are listed. 4th is, what do you need to get ready for listing? So I think that's the way we need to look at it. Yeah.
Thank you, Vijay. So the next question is also around impact, wherein the organization is asked that they focus on verification of outputs on a regular basis in their programs. So, how should they be looking at assessing outcomes in order to provide enough proof to the investors on the social stock exchange about the impact that their program has created?
Right. I think one of the criteria itself to get listed is for each organization to demonstrate how the impact of their program is going to be determined beyond the tenure of the sort of project, but also in terms of longitudinal. I think here typically when you look at organizations who receive CSR funding, right? There is a sort of within a year of completion of the project, the assessment is done by third-party agencies, and we don't look at a longitudinal element there. We largely look at the fulfillment of sort of the targets that the organization has taken on for itself in that project, and also what are sort of very direct, immediate outcomes that can be demonstrated. Of course, the CSR bill also says to include an element of sustainability, which, as you know, Yash, is something we look closely in our impact assessments. Here, I think organizations may be seeking money for a new program they're about to launch, could be for top-up funding for a program which has been running. It could be for scaling up the program. Maybe there's a new geography they want to enter into. So there will be some amount of impact for those organizations which have programs which are already running. You definitely have impact which will be able to show as outcomes that to some extent, some outcomes which have already been delivered in the program. The need to therefore articulate what we see as longitudinal sort of outcomes and impact, sort of behavior changes, looking at how the program is transferred to the community, and it's going to continue beyond the life cycle of the funding that the organization is seeking. I think that articulation will be important. Therefore, brings up the whole purpose of these primers and the whole purpose of this entire activity that all of us are advocating for very strongly, which is your preparedness. And it's a good time for organizations to start looking at, what sort of data we've been collecting, what have we been showcasing. And I believe that, well, if you look at the social stock exchange, they've got some sort of an impact scorecard already in place. They're simplifying it. They're saying we don't need to look at 50 unique impact indicators across organizations. there are standardized sort of indicators, which actually in a way is good, because for any investor, a complicated indicator for organization 3, 4, 5 and with someone else, it kind of becomes difficult for somebody to gauge, right? You want to have, and that's why, the stock exchange, we know what a blue chip would mean. We know what a AAA script would be, or a B minus or whatever. We understand those, the way the ratings have been kind of fixed. I think that's the sort of endeavor, like to have a standard set of indicators across your programs, which make it much more easy for somebody to understand. Of course, any donor is at their liberty to connect with the organization on an individual basis and further understand what they could be more unique indicators. But I don't think, I think for the listing purpose, would be a standard set. So I think it is a good time for organizations to start looking at, what sort of data they've been collecting. How do they kind of bring in much more effective, the entire data cycle, right? From data collection to sort of reporting. How are they looking at it? It's a good time for them to start doing it.
Yes. We'll take a couple of more questions.
So these are the questions which came to us through the course of the last 3 sessions. Am I right in my understanding?
Yes.
Okay. So I do know there are a couple of people on the session today. If you have any questions for us, you could just kind of, switch on your camera, unmute yourself, and ask any of us if there's any other question to us. I'd also like to take this opportunity to introduce Mehul. So Mehul Jain is here, and if he could just switch on his...
Yeah, I've switched on my camera. Can you see me?
Hold on, let me just organize my... Yes, hi Mehul.
Hi.
I'd like to also introduce Mehul Jain at Baruchan Partners. We're very delighted to have Baruchan Partners, join us in this sort of collective on the social stock exchange. They've been a long time sort of governance compliance sort of firm that has looked very closely at Social Lens, at Toolbox, and the work that we've been doing in the impact sector. And the next session will really be chaired by Baruchan Partners, which will take a deeper stab at the regulatory and also from an investor's perspective. What is it that investors would be looking at? So I think it's important for those of you who are looking at the social stock exchange as the platform where you want to raise, social capital for your programs, for your portfolio organizations, for your own organization. I think it's important to understand what the investor perspective is. So while there is a legal and regulatory framework, it's also important to understand typically what investors would be looking at, what are the sort of options that they would have before them. And so very quickly, Mehul, if you just want to just take a minute or two to introduce yourself and what actually people could expect in the next session which is scheduled on December 14th. Over to you. Yeah.
So, hi, Mehul here. I'm a senior associate at Baruchan Partners. I work with the capital markets and securities law practice of the firm. Right? My practice area has been focused on the fundraising for your regular set of companies. Now, since social stock exchange framework has been introduced, it's a very unique framework which has been introduced in India. We're closely tracking that. And the next session, what we'll focus on is more on the disclosure requirements that are there currently under the listing regulation and the ICTA regulation. There's some disclosure obligations that have been stipulated, such as annual impact reports are there. Similar, something akin to what a listed company has to comply today. So that's the sort of a framework that they're looking for. We will also focus on what the investors would be looking at when they're looking at an entity who is listed on a social stock exchange or registered on a social stock exchange. From that perspective, we'll throw some light on that also. from a regulatory perspective.
Thank you, Mehul. I think the next session, which is scheduled for the 30th of November, will really look at sort of a little closer lens on the impact data, and what are sort of the impact indicators. Fourth session will focus on your M&E sort of reporting requirements, and as I always mention, it's a good time for us to revisit our impact indicators. It's a question, and Ravi and Ritu, as per the eligibility criteria mentioned, it states 50 plus lakhs spending and annual funding of 10 plus lakhs. How can this be achieved with 10 lakhs funds and 50 lakhs spending?
Yeah, good question, Lakshmi. I think even we were very perplexed of how this is sort of structured. But I think what we understand is that these are minimum requirements. So if an organization is larger than this, it is very possible that, with 3 years of existence or more, you will have rollover of funds. You may have, grants that are there from previous year that are rolling over to this year. And 50 lakhs is a spend limit, right, which is disconnected from the receipts. So as an entry barrier, like, if you have grant funds from the previous year and you spent them in this year, it is possible to, get there where you will have, 40 lakhs, which came from the previous year. And so you're at a 50 lakh spend and the fundraising is only at 10 lakhs.
Yeah, and we personally feel there could be a little bit more clarification on how to distinguish the two, because it is something, it's not like one out of the two, the both are compulsory to achieve. So we personally think there would definitely be certain criteria to look at when you're looking at 50 lakh spend for a financial year versus what's been raised. So it could be that raised in a certain manner, which is amounting to 10 lakhs. It could be that as well. But it's a requirement that we need to understand with further, updates from the notification.
Yeah, exactly. And like we just said, there are more amendments that are underway that will keep on happening, right?
Yeah.
So we're hopeful that there will be more clarity, but as of now, this is our understanding.
Okay, thank you.
One of the things, just before we round off today's session, I think one of the things that, the collective, the SSE collective, I'm just going to go with that term, people, both at ARIA and BNP, is that in the coming weeks, we will be putting together a sort of a readiness assessment, sort of a tool. It will be available to organizations. You can actually take a sort of a self-assessment, gauge yourselves, which actually kind of puts together a roadmap on what you need to kind of start doing. So do watch the space, do stay connected, do follow us on social media. We'll have these announcements. I think for us at Social Lens, we're absolutely delighted to have two wonderful partners work with us, Arya and Barucha and Partners. I believe it's truly a collective of very, very complementary skills and beyond a very strong sort of interest and alignment towards what this could mean for the social impact ecosystem. So thank you all again for joining us.